Hi, everyone. Today, we're going to talk about the top 5 questions investors ask and how to best answer them. My name is Luciano Perdomo, and welcome to the Bergden Group YouTube channel, a channel dedicated to helping entrepreneurs and small businesses. So, today's agenda looks like this. We're obviously going to go through the top 5 questions investors ask, and then we're going to go through question by question in detail and provide guidance on how to best answer these questions. So where does this come from? How am I getting this information? Well, I spent about 3.5 years working as a venture capital financial analyst, and these are the most common questions that I asked, management teams of prospective, companies we were investing in. But they were also some of the most important because they determined whether we made an investment or not. All right. So let's get into the nuts and bolts of this and go through the list of questions that are most common and most important. So the first question is, what is your business model? Essentially, what do you do and how do you make money doing it? The second question, what is your plan for scaling the business? What is your strategy, to make this business grow? The third question is, all right, well, what is your unique value proposition? What makes your product or service different amongst competitors? The fourth one is, well, who is on your team? What experience do they have in this industry? And have they had success before? And, why should I invest in your team? All right. And the reason this is, investors are really focusing on the jockey, not the horse. And the last question is, well, what is the structure of the deal? So is the money being funded via equity, via debt, right? If, assuming you're needing money. And how is that money going to be allocated, right? Is it going towards marketing and sales? Is it going towards increasing your headcount, research and development, or something like CapEx? All right. So those are the top 5 questions that investors ask and are some of the most important, especially in early conversations. So now let's go into how we answer these questions. So back to the first one. What is your business model? Well, you really want to be succinct with this. You want to first really focus on what your product or service is, right? And then you want to go into how you sell it and where you sell it, okay? And then kind of go into how you're marketing that product or service to your end customers. All right. Well, the next question, in regards to scale, really what this means is, what is your strategy for growing the business? So really you want to focus on, we're going to maybe expand the way that we market our product, right? Let's say you're a coffee company and you're saying, well, we want to be able to get, increase sales by $1 million. And the way you would do that is say, okay, we're going to increase sales by $1 million by investing in more digital advertising, getting additional insights on our consumers, but we're also going to invest in a dedicated sales team that's going to go door to door to these different grocery stores and retailers to be able to expand our online presence with them, but also our in-store presence. That would be a way to say, this is how we're going to scale the business. The third question, well, what is your value proposition? Here, you really want to emphasize the unique features and benefits of your product or service, amongst your competitors. And that could be something such as saying that maybe a feature or benefit of your product is more pronounced, meaning that the competitor already has that, but you offer it in a much more greater scale. Or, even better, saying something that your competitor doesn't even offer at all in terms of features and benefits. So let's say you're a coffee company again, right? Let's say that, one of the features and benefits that's more pronounced, you can say that, your flavor is just so much better, right? It's not super bitter. It's not super acidic. You just have this great flavor that offers the same features and benefits that your competitor does, but it's just even more pronounced. All right. And an example of, let's say something where it's your competitor doesn't offer at all, you can say, hey, we have this proprietary process that our competitors don't, and it allows us to achieve, much better margins. It allows us to produce at a cheaper rate, and also it's something that happens to taste really good. That's an example of, your unique value proposition. The fourth question, really going into your team, your experience, your industry exposure experience, that's really important. And really here, what you want to focus on is the successes that you've had in previous ventures, if it's either a startup or maybe success in the corporate world, right? Moving up the ladder, or, success in certain projects. And really, if you've had success in a startup, you really want to touch on that, because that's the experience that you're looking for. Someone who can take a company from zero, basically from nothing into something, and scale it, to be able to produce, a very nice return on investment for these investors. The other thing you want to touch on is your technical experience. So, whether that's, you have firsthand knowledge on your product. Let's say, again, we're a coffee company. So if you're someone perhaps who has worked at Starbucks, or who has launched another successful beverage company and knows how to produce a product that tastes great, but also knows how to properly sell and market the product, in the space that you're going after, that's going to be something that investors are going to be very keen to and really like. And last question, one of the most important ones, really regarding the investor's money and how it's going to be used. Here you really want to focus on, again, where the money is coming from. So whether it's going to be funded by debt or equity. So focus on the deal structure. And that's all negotiable. That's subject to change. But most importantly, really you want to focus on how are you going to use the money. So where it's going to be allocated to, right? And what the expected impact of that is. So providing kind of a high level pro forma, right? So an example would be like, if you're saying, all right, I'm asking for $1 million to be funded via equity, all right, and I'm going to, evenly distribute across marketing, CapEx, and operations and R&D. Well, what you'd want to say is, by investing $250,000 in marketing, this is the kind of impact we're going to see. We expect to have increased sales. We expect to get a lot more exposure on our digital platforms, and we expect to build brand equity. All right, and it's going to cost you $50,000, and we expect that it'll produce revenues of Y. That's really what you want to articulate. So, in that answer, you're articulating, one, where the money is coming from, so whether it's debt or equity, how it's going to be used, and then the impact of that money being allocated to each of those respective categories. So it shows that you're showing the investor that you're thinking about the conceptual strategy, but also kind of the financial strategy and, the quantitative impacts of it. All right. Well, thank you so much for listening. Please feel free to like and subscribe to my channel. It would mean the absolute world to me. And please stay tuned for more content. Thanks.